the corporates are not taking money, but at the same time, we are also seeing a huge opportunities which are coming from the SMEs.
Banks don't do only lending. We also do lending. And so therefore, banks need to have that ability to be able to serve customers across the capital structure.
Can India work with 8 to 10 large banks, 4 of them private, 5 of them private, 4 of them public? I think it's a distinct likelihood over the next decade or so. That's the opportunity.
We are here to discuss with them some of the emerging challenges that the banking sector as a whole is facing. And because the private sector is slightly more nimble than the public sector, we are here to pick our panelists' brains on how to move forward in a intriguingly different landscape that we are seeing every single passing month, with technology advancing and geopolitical tumult and all sorts of factors coming into play. So before I begin, I wanted to first get some sense from the panelists on the overall theme of the session, as we are calling it. Is it time to revisit India's and overall the banking model? As we've seen in recent commentary from several people, including the RBI, large corporate borrowers are no longer relying purely on bank funding for investments. They have non-banking means of financing available. There is a limit to how much we can grow on the retail loan portfolio. And so I think some of this was also alluded to today in the morning when we had Mr. K.V. Kamath here with us. And he said the challenge is that, if a corporate does not want to take a loan from you, you can't force it down his throat. His insight was that this situation is going to, if anything, only get more pronounced going forward, where your easy lending to corporates is no longer a thing that we can expect. What he did say that it is time to reinvent the banking model, and it's up to each private bank and public sector bank to do so. I wanted to first get some sense from you on whether you agree with this hypothesis, and if there was a reinvention that each of us needs to do, what kind of reinvention would you imagine that to be? Obviously, it would not be static, dynamic as per the situation, but maybe Mr. Prashant Kumar, could you start on this?
No, I think the most important part in terms of agility and very, very dynamic change. Okay? I give you an example in terms of we used to have the hockey, where our team was always playing in a 5-3-2-1 format. Okay? So if somebody is a forward, he would never go to the middle space or the backside. Okay? But when we were playing with the European teams and others, I think it was not a concept like somebody would be only playing forward. If there is a need, they would come in the middle and they would come at the back. So I think same thing is happening in the banking side also. It is not like the corporates are not taking money, but at the same time, we are also seeing a huge opportunities which are coming from the SMEs, which are coming from the mid-market, which is coming from the growing space on the retail also. So I think the banks are fully aware in terms of opportunities which are being available through multiple sources of the customer segment. The only thing is you have to be nimble enough and prepare yourself to take care of the different segment of the customers. So I think I'm not seeing like this is a point where we need to reinvent. I think it's a continuous process, which I think banks are adopting very well on all these fronts. Like if we see currently, especially the Q2, we are seeing a demand again coming from the corporate side. Okay? And the Q2 growth on the corporate credit has been much better. So I think depending on the opportunities for the different business segments, today banks are in a much better position to take care of those customer needs.
Mr. Manian, would you like to comment on that?
So, when is it not time to revisit? It's always a time to revisit, right? So, I think it's a continuous process. Uh, and I think things, now the cycle of change is faster than it used to be. So in that sense, the way you look at things has to be more agile, like he said, because the change is faster. But interestingly, if you see, last few regulatory changes that have happened are also trying to get certain opportunities for banks which hitherto were not available to them, right? Acquisition finance or capital market financing, things like that. So there are also opportunities coming up. So I would say that yes, the complexion of the opportunity will change, and as the debt markets do better, uh, you know, the banks will have to think differently about what opportunities they go after. But even you take project finance, it's an area of specialization. Till now, it wasn't. I mean, everybody used to just form a consortium and get in. So banks will have to think about specialization, sectors. There are multiple, dimensions you can think around. So will Will there be more specialization in corporate lending? I think so. That will be an opportunity. Are there newer opportunities regulatorily that will come up? Yes, there will be. So I think banks will have to rethink about the vanilla lending that you otherwise do. That opportunity may go, but there will be many other opportunities that will come up. And I think banks have to, the more progressive banks will have to be alive to those opportunities and react to that. And I'm sure most of the progressive banks will do that.
Right. Mr. Anand, of course, apart from your thoughts, I also wanted to get your sense of what Mr. Prashant Kumar said, that there is some revival of sorts in corporate borrowing demand in the second quarter. And, given that there is some economic boost likely from the GST reforms and so on, do you expect that to continue if that is already happening? And a broader point, of course, of revisiting the banking.
So let me take the corporate issue first. I think one needs to also recognize the fact that over the last 5-7 years, corporate balance sheets have significantly delevered, and internal cash flows have been much stronger over this period, and so therefore their need for long-term capital in that sense has been relatively muted. Two is we've also seen a significant growth of other avenues to be able to fund within the capital structure. You could go abroad, raise long-term debt there. You could raise money from our local bond markets. You could raise equities. You could raise money through private equity and so on and so forth. And so therefore, as a bank, please remember that banks don't do only lending. We also do lending. And so therefore, banks need to have that ability to be able to serve customers across the capital structure. And so therefore, at some point in time, you will make NII, which is on your loans. At some point in time, you will make fee incomes. At some point in time, you need to use your balance sheet. At other points in time, you will need to sell down to be able to do more transactions with customers and so on and so forth. So therefore, to that extent, how you serve customers, particularly the corporate customers, I think has fundamentally changed. And I think this whole narrative of, will they borrow from us or not, I think is a bit speculative in the sense that banks don't do only lending to them. I mean, we also do corporate salary accounts. We have current accounts. We enable, payment of GST, custom duty, etc. We do LCs, BGs. We do FX for them. And so therefore, the relationship has certainly gotten much wider in addition to the loans that we provide to them. And so therefore, I think corporate banking will continue to be a very, very important part of your balance sheet. I think banks have also recognized the fact that making RAROC just out of lending is never going to be enough. Will always remain a competitive market. And I think banks will pick and choose various segments. And, Manian spoke about project finance, for example. Some banks will do it, some banks won't do it. But I think, as you build out your capabilities, you pick and choose your capabilities, I do believe that the corporate bank will remain a critical component of any bank balance sheet, both for NII as well as on fees. The next question that you had was, are things looking better? I think certainly things are looking much better. I think the flow-through impact of the tax cuts, the easier liquidity, the GST cuts. I mean, let's look at it slightly differently. If you look at things 2 years back, there were three things that we had, headwinds from. You had fiscal headwinds because we were seeing fiscal tightening, we were seeing monetary tightening, and we were seeing regulatory tightening. And I think, both from SEBI and RBI, I think clearly we've already seen the intent to ease business or ease doing business has been, really the intent of RBI. And we've already seen easing of the fiscal through GST, etc. We've seen monetary easing. We've moved from a tightening environment to a relatively easier environment. We've seen rate cuts. Maybe we'll see a few more rate cuts. And so therefore, those headwinds have actually turned into tailwinds. And I think we will certainly see that, helping us as we go forward. And I think ultimately banks are a representation of what happens in the underlying economy.
Right.
And so therefore, if the economy does well, I think it's inevitable that banks will do well as well.
Right. So 2 points I would like to take away from the points that you made. One, of course, is that banks no longer are, they're looking at a larger bouquet of services that they work with for clients, whether it's corporates or, and secondly, that, while the easing cycle is expected to boost things, I think, just to one additional point there, do you sense that there's also a regulatory easing, at least when it comes to the monetary and banking side? Regulatory stance has also, apart from the monetary rates going down, there is sort of, for instance, on project finance, banks have a little more leeway. The risk factors that they were earlier to work in for some other categories of loans, they have been sort of calibrated lower. So is that also helping to?
Oh, absolutely. I think I did call the previous the monetary policy statement that the RBI put out. I think is the fact that we have seen 22 regulatory changes, within one policy. I think we've probably not seen that in, I don't know, 10 years. And I think, like I said, that clearly shows the intent of RBI to see how, I mean, of course, monetary and liquidity, etc., will happen, but how can we make it easier for banks to do business as well? I think is a very, very welcome step. I mean, we've seen a similar sort of activity, from SEBI as well, across multiple measures. And I think these will just add to the fact that we will hopefully see better days as we go forward.
So, it's very unusual because, like you mentioned, this monetary policy, the October one especially, though it was neutral, the rate was unchanged, but, the kind of pages we had to devote in our newspaper to still cover that non-event was significantly higher than what and, unusually, we've had this finance ministry's monthly economic review spending particularly a large number of pages describing how this particular MPC's regulatory changes are significant in terms of, ensuring that there's a long-term credit flow to the economy sustainably. And it's not usual for the finance ministry to make such comments, especially appreciative comments about the RBI. So, but, jokes aside, I think I wanted to get your sense also, Mr. Manian and Mr. Prashant Kumar, on how the regulatory aspects going forward can also possibly be tweaked to make financing easier.
I did mention it in my earlier, some of the regulatory changes you have seen are, I mean, this has been an ask from banking industry for a long time, right? To acquisition financing has been an ask for a long time. And finally that came through. So I think the way regulators are also looking at what can spur growth, and therefore I think it's a coordinated effort on driving growth. And as regulator makes some of these simpler, I think it's a great opportunity for banks. And acquisition financing is one. And like Rajiv mentioned, there were 20 other things there which were changes. So I think a combination of what the government does and what the regulators do and what the banks do, all three need to be coordinated to really drive growth. And I'm quite clear that if you want a 7-8% kind of growth, if credit doesn't grow by 13-14%, it's
Right.
very difficult to get a 7-8% kind of growth in the economy.
Right.
And therefore, it's critical for all three to be coordinated, this banking sector, finance ministry and RBI,
Right.
to be coordinated in a manner that drives growth. And I can see that happening. I think banking industry, of course, will step up to the challenge. I am very sure, because look at the industry position, probably one of the best in several decades in terms of asset quality, in terms of capitalization, in terms of availability of capital. All of that is, I mean, it is almost like a banking industry is almost like in a position where they are all set to fund growth,
Right.
just waiting for it to happen, right? Otherwise, their internal act is fully in place, whether it is to do with asset quality, capital availability, capital
Right.
adequacy, all of that. So I think it is it's an opportune time to be driving this for the industry. And a few years back, and not only private sector, you look at the private sector, you look at the public sector, banks, all of them pristine asset quality, right? Just now. And all of them doing well, all of them, even the public sector banks have done extremely well in the last few years. So overall, the sector health is very good, ready to go.
Ready to boom. So, Mr. Prashant Kumar, do you think that, while these regulatory measures are welcome, there's also sort of better listening happening? Policymakers are listening more, and, is that, across regulators like Sir said, SEBI, RBI, Finance Ministry, is there the potential and capacity to listen has improved? Is that a sign of what we're seeing it translating into more pragmatic policy making across the board? Is that your sense as well?
No, absolutely. I think maybe we have not, or somebody has not said like, this is the next wave of reform. But actually, if we see the kind of measures which regulator, both RBI and SEBI are taking, this can be absolutely termed as a next wave of reforms. Okay? The second part, in terms of like, this is also the right time to do this. Okay. If you see the kind of interest which the foreign capital is having now in the Indian banking space, that also shows that not only the banking sector has matured, things are better, everybody is getting a comfort, but even the international, the money is having that confidence in the Indian economy and the banking sector. So I think this is absolutely peaking at the right time. Okay, but I think this is a great opportunity where we are getting confidence both externally as well as internally. And I think with this kind of a support which is coming from the regulator and the government, I think this would be the best time for the banking.
Right. Just to take that thought forward a bit, if at this point, while we have good listeners in policy making positions, if there were certain more wishes that we could convey to them, would you, each of you, maybe give me 3 suggestions, that can possibly help nudge them a little more on this front?
So I can just give you one example. Like after the 22 things which came in the last policy, and in a forum of bankers, the question was, what can be the next demand? They said, nothing is left. I think now the onus is on actually the banking sector to deliver on those kind of initiative and the support which has come from the regulator. So I think as of now, it's very, very difficult to even think in terms of what next demand we can place. I think the onus is for execution.
Right. And on M&A financing, I wanted to get some sense of the, now that the RBI has come out with the guidelines for it, I wanted to get your first reaction of sorts on, how feasible do you see that playing out? Maybe Mr. Anand could start there.
As Manyan had mentioned, this has been a long-standing ask from bankers. The first phase when Tata Chorus etc. happened, that was in a sense the first phase of of acquisitions that corporate India did, where they were actually going offshore to be able to acquire assets. But the last wave of acquisitions has really been onshore, where onshore entities were looking to buy onshore. And I think it was ironical that onshore banks were not permitted to finance those acquisitions, and therefore almost the entire financing in that sense was done by balance sheets which were offshore. And I think now with this it now opens up a long-standing requirement for banks, and I think given the strong relationships that that Indian banks have with corporate India, we are quite excited to be able to participate in this opportunity as we go forward. There will be various acquisitions of different size and scale. Once again, we banks will have to pick and choose which of these opportunities they are comfortable with, which of these opportunities they want to partner with. But I think the fact remains that a significant profit pool which hitherto was going offshore is going to be captured onshore, and I think that's a very, very positive sign.
Mr. Mani?
The other perspective to this is that I think acquisition financing will come with it's not vanilla lending, right? So it will come with its complexity, it will come with skill requirements, it will come with, where banks with some investment banking capabilities will be able to understand those transactions and source those better. So there will be those dynamics that will play out. And therefore, to get into acquisition financing is not going to be everybody's cup of tea straight off the bat. Because, like I said, understanding the transaction, what risks will happen in that financing, those will be more complex than what traditionally bankers have understood in terms of business cash flows and things like that, right? Some capabilities to understand valuation, how you create security on what do you create security, what will be the structure, how will that be paid off, because there will be complex structures, SPVs. So it's not going to be as vanilla as the traditional corporate banking was, and this will require some acquiring skills for the banks which get into that. So that is something that there will be banks which will do better, there will be banks which will not do as well.
I think completely agree with what Mr. Manian is saying. You need to have those skill sets, okay? But I think the banks who would be having those kind of skill sets, and there are guardrails within the draft guidelines. One of the very important guardrail has been like, it has been restricted to 10% of your net worth. It means if you want to say, explore those things, maybe initially you explore up to that extent, okay, which would not, God forbid, if any wrong assessment happens, would not result into a very high risk for the banks. So I think within those guardrails and with the necessary skill sets, only those banks should try for that. But I think we see this as a big opportunity in terms of not only lending, but also making some reasonable money out of it.
Right. Just taking up what Mr. Anand said about, this also creates onshore opportunities for lenders where offshore lenders were taking up the space that this was not available for us. We are also seeing the other aspect of this happening where a lot of foreign investors are now interested in, private banks in India. And, we have prominent deals, including two sitting right here. So, but I think I wanted to get a sense of how do you see this playing out in the sense that, they're obviously, like you said, they're comfortable investing in India now with the regulatory environment and the growth prospect. But also, do you see that this could become a way for a lot of mid-scale banks to, grow faster and, scale up on the size front, scale up on the services front faster? How do you see that dynamic playing out, Mr. Rajiv Anand? You want to start?
Might be better to start with the two gentlemen who have raised
I think
billions of dollars. But I think
in the interest of more objective opinion.
Um, I think one of them mentioned that I think it's just symptomatic of the state of the banking industry in this country. Balance sheets are clean. There is ample multi-decadal growth opportunities. Whether it is in retail, SME, many parts of corporate, the entire wealth management space, etc., etc. I think the size of the opportunity is huge. And I think in most parts of the world, there are where growth is an issue. Clearly getting investments into in the Indian banking sector, I think is inevitable. I think what here once again, I think we spoke about RBI's intent, through the 22 changes in regulations in the previous circular. But I think previous MPC policy. But I think the fact that many of these transactions are going through as well and quite comfortably, and it clearly looks like RBI is comfortable with foreign money and reasonably large holdings in many of our banks. I think is also a change in mindset that we are seeing. So RBI is comfortable with the state of the banking industry, and so therefore it's eased policies. RBI is now comfortable to see larger holdings from credible large pools of money that are available globally, is once again a big change that we are seeing as well. And I think to me both are huge tick marks for the banking industry as we think into the future.
And it could help scale up things faster.
Absolutely, and I think at one level, many banks will now have more capital to be able to invest in infrastructure, technology. Competition will heat up, but I think that's only good for the banking industry and most important for the customers as well.
Right, Mr. Prashant Kumar.
No, I think definitely bigger opportunities in the Indian financial space. That is one part. But the second part also in terms of the way the regulators are looking at these opportunities. I think that is something which is also giving a lot of comfort to those private, the foreign capital. Okay? The third part which you are talking about in terms of how it is going to help in terms of scaling up. I think we have seen a clear-cut advantage of the scale after the consolidation on the public sector side. Okay. Now on the private sector, those kind of consolidations cannot be driven either by the government or by the regulator. But I think this particular thing which is happening in terms of having a lot of foreign capital coming in, some of the mid-sized banks would be having an opportunity to become bigger, have the advantage on the scale side, and contribute to the growth aspiration of the country. Because ultimately, when we are looking in terms of Viksit Bharat by 2047, unless you have the large banks, it becomes difficult to take care of the development needs. So I think this foreign capital coming into the mid-size banks would definitely help in terms of creating large banks in the private banking space also.
Mr. Manian?
If you look at the direction in which the sector is headed, PSU space will probably get consolidated into 4 or whatever. That's the direction it seems to be headed, right? A country like India, large country like India, and a growing country like India, how many banks can it have? Can it have 8, 10 banks? 4 of them will be, let's say, PSU banks. Can there be 4 or 5 or 6 large private sector banks? I think there is space for that. So I think the race is for getting to, of course, there will be niche banks, which is a separate thing to do. But can India work with 8 to 10 large banks, 4 of them private, 4 or 5 of them private, 4 of them public? I think it's a distinct likelihood over the next decade or so. That's the opportunity. And that's where the medium-sized banks have to make that bid to get there, right? And that's what you are seeing. I mean, the opportunity is still there. I mean, there can be 5 or 6 large private sector banks, and that is the opportunity for the mid-sized banks to chase.
So in that context, if we were to place the current developments of foreign investment coming in, and as these banks scale up, the private mid-sized banks scale up, do you think over time, I mean, because we're talking about 2047 horizon here, do you think over time that we might even see private banks going through the kind of inorganic consolidation, or do you expect growth to be organic going forward?
No, one can never rule out a consolidation, but of course, over a period of time, I think, like I said, finally there'll be 8-10, and there'll be some level of consolidation to get there, right? So one can't rule out consolidation, but I would attach some value to this foreign capital. Of course, it is important, and there is what about 70,000 crores that is coming into India, so it is of course valuable. But this issue around getting 5 or 6 large private sector banks is not necessarily only around
Organic.
foreign capital, right? It can be foreign, domestic, whichever. I think, yeah, it is incidental. You have seen a few transactions just now on foreign capital, but I think foreign capital is incidental to this. Whether with or without foreign capital, I think will 5-6 large private sector banks happen? It will happen.
I completely agree. And I think to the question that you're asking, private sector consolidation, it's not new. I mean, we've seen, Times Bank consolidate with HDFC Bank, Centurion Bank, consolidating Bank of Rajasthan, etc., etc. I mean, over the years, we have seen, consolidation within even the private sector space, and I think it is inevitable that over the next, 3, 5, 10 years, will we see meaningful consolidation within the private sector space? Absolutely.
Prashant, you were smiling a little bit.
No, I think a slightly different viewpoint. I always believe that for consolidation, you require a central driving force. In case of public sector space, the driving force is the government of India. Okay. In the private banking space, we lack that driving force. Okay. So I think consolidation, if it happens with a purpose, is different from the consolidation which has happened to save some of the smaller banks. Okay, that is one part. The second is especially like when the different sources of the capital would be driving these banks, then I think the consolidation would be little difficult. The third part is that consolidation always comes with some pain points. It's not easy. Okay? So it means that central owner need to have that patience for some time. If you see the consolidation happening for 2-3 years, you are not able to drive. But when there is a capital and when there is an expectation on the return on the capital, whether the people have that kind of patience to undergo that pain. Okay? So I think in terms of getting bigger organically, maybe we are going to see. But I think only time would tell.
Right. So just a couple of quick questions, and before I allow the audience, also has a lot of questions for you, I'm sure. Just wanted one sense from, Mr. Manian could probably tell us, where do you see retail lending? I know it's in terms of scale, it is quite huge, and but is there some sort of an inflection point we've reached, given that recent growth has been muted? And I'm talking before the GST cuts and all, but is there a sense you have on retail lending and its prospects going forward?
I think retail will continue to power growth for a long time to come. I think it will go through some cycles like we have seen in the recent past on unsecured and things like that. But I think those are cycles that are natural to happen. It goes through that cycle of excessive borrowings and then correct and then move on. So I think those things can happen. But I think in the near future, I think retail will continue to power balance sheet growths of banks. While, of course, we discussed newer opportunities on the corporate side, I think retail, even now, if you look at the mix of overall credit growth, of course, corporate is just now weak, but large part of the credit growth in the last decade actually has come from retail, right? And I don't see that changing significantly going forward. Yes, the methods of doing that, the way we evaluate, the way the processes are, the way analytics will play, the way AI will play a role in all that is going to change. The way we do it may change dramatically. Over the next decade, I think it will change significantly. I think the information asymmetry will completely vanish. So therefore, and even a lot of regulatory intervention, which is going to make it far more transparent, far more level playing and all. So I think the way we do it will change, but I think retail will remain very, very powerful.
Sort of
engine for
you know,
banks.
introduce the topic of my next question, which I want to ask Mr. Prashant Kumar on, how do you see the AI and, fintech space sort of affecting banking as we knew it? And, how are we skilling our workforce to cope with the new things that they need to do?
I think definitely the AI is a new technology, okay? And you can't say like, I'm not going to do it. But you need to identify the right use cases because ultimately AI would also depend on the kind of data which you have and the manner in which data can be used for decision making. Okay. So I think if we see in terms of most of the banks, there is an evolution where we have to move from the manual processes to the automated process first. And in that process also structure our data in a manner where data can be used seamlessly for decision taking capability. Some of the use cases which may not be so much dependent on the data, but also in terms of engagement and servicing the customer. But we need to be very, very cognizant about the data privacy whenever we use the AI. And also in terms of using it responsibly because there is also issues in terms of the cyber frauds. So I think whenever we use new technology, the protection of the consumer, both from any kind of say losses to them and also in terms of data privacy, we have to be careful. But definitely these are the technologies which can be used for the right use cases initially and then we can scale it up for the other part.
Mr. Anand, do you have any thoughts on this aspect?
This actually reminds me of 2013. At that point in time, most banks were only focused on internet banking.
Right.
And we were just beginning to make forays into creating mobile apps and mobile banking. And it was in a sense a bit of an experiment. I mean, nobody thought that people will do banking transactions on a mobile app. Cut to 2025, most of the banking transactions on internet banking have flatlined, and we've seen a order of magnitude shift from internet banking to mobile banking. And within that, if you superimpose what happened to UPI, during this period, I think it's been a gigantic shift that we've seen in customer behavior. I think the use of AI is where mobile banking was in 2013. There's a great deal of skepticism today in terms of ye chalega, nahi chalega. What is the use cases? Is there ROI on this? But I think as Prashant mentioned, it is you must have a AI strategy. And now what that is, how much you will invest, that is to each his own. I mean, a lot of big banks across the world have made significant investments, may or may not be getting full benefit out of it. But I mean, let me just give you an example. I mean, for a relationship manager or when I go to meet a corporate, the first thing that, or the one of the things that I do is get into Chat GPT and say, hey, I'm meeting so-and-so client. I mean, what are the 5 talking points I should have? I mean, it just makes life much easier. I mean, earlier I would have, my assistant do a 2-page note for me. That is no longer required. And so therefore, how each one of us will be able to find use cases to improve productivity, to be able to serve customers more intuitively, I think is going to define banks into the future. Remember also that we spoke about the fact that regulators are making banking easier, etc., but they're also taking profit pools away from banks. I mean, you've seen SEBI's announcements on the possibility of reductions in TR, reduction in brokerages, etc. Will hit the manufacturers or brokers, but will certainly benefit the customers. And we're seeing similar trends with bank regulators as well. And so therefore, if that pressure on margins and fee is going to be there, then we have to work much, much harder on costs to be able to sustain ROAs and therefore ROEs. So I think we are going to see a huge shift in terms of how banks will operate, let us say over the next 5 to 10 years. My worry actually is that many of us are thinking of this as incremental, meaning this is a customer journey. How do I throw AI at the problem? But what if the way that we do business today itself doesn't exist because of AI 5 years from today? Are we prepared for such a future? Is a question that every banker or every CEO should certainly be worried about.